The real estate market has created more millionaires than any other asset class, period. And as I mentioned in my previous real estate video, I recommend that you wait at least 5 more months before you look into purchasing a home. The real estate market is no longer a wholesaler's market, and I know this presents an opportunity to invest, but be patient, as I think the real estate market will descend even more. Here is why I think the real estate market is going to crash. The real estate market, like any other market, is cyclical, and we can potentially be at the beginning of the downturn, as we are clearly in a recession. The first thing that I look at is the interest rates. See, the Feds lower the interest rates to make sure the banks can offer great deals to consumers and to keep the banks lending. The banks need to make money on their money, and the Feds help them by lowering the interest rates. The second thing is the unemployment. The rate of unemployment is at a record high, and this will impact many homeowners. Some will go in default and eventually lose their home. These properties will be added to the real estate inventory and thus increase the supply. At the same time, folks won't be looking to buy a new home if they don't have a job. Therefore, this would decrease the pool of potential buyers and reduce the demand for real estate. As you can see, this increases the supply of houses in the market and decreases the amount of potential buyers, creating a disbalance in the real estate market. This favors the buyers. As a real estate investor, I look at many different factors before I invest. And during these unprecedented times, I'm starting to look at two unconventional numbers to evaluate the real estate market. The first one is the mortality rate. And yes, I know this is horrible, and unfortunately, this number has increased drastically. But that only means that a lot of properties owned by those who unfortunately lost their life will go into a legal process and eventually will hit the market, once again increasing the amount of supply. The second number is the divorce rate. This is another bad one. And there is no secret into knowing that in an economic crisis, the number of divorces would increase. That means that couples will have to split their assets, including their home. And again, more properties would enter the market as a result, again giving another stimulus to the supply line. These two factors will start to tilt the supply and demand balance. And with more supply than demand, you guessed it, prices would drop. So let's recap. Lower interest rates will keep the banks lending. And you might think this is a good sign, but it's quite the opposite. See, banks would see a cutting interest rate by the Feds as a sign of an imminent crisis in the market and would respond and try to protect themselves. They would make it harder for potential buyers to qualify for a loan. The unemployment rate and the financial hardship would add properties via foreclosure to the real estate market as well, increasing the supply, and at the same time, people who are facing financial hardships won't be inclined to buy a real estate. And this decreases the demand. In addition, divorce rates and mortality rates would add more properties into the market and an increase in demand. As you can see, all these signs point to a real estate crisis in the short term. As a result, there will be more houses coming into the market than people wanting to buy them. Let's look at these numbers. In early March, the pool of optimistic potential buyers dropped from 75% to 43%. That's almost half. And by mid-March, 48% of the real estate agents said that buyer interest decreased. And this is another obvious numbers. If people started to lose their job, obviously the interest into buying a new property would decrease. I think this crisis will present an excellent opportunity for investors and people who want to purchase a new home. I would think that the best month to buy a house would be around November 2020, pre-election. The uncertainty of the election would add even more stress to the real estate market and potentially would bring down the prices even more. You can make money in real estate in various ways, but I always recommend investing in rental properties and create passive income. But let's be clear, when you buy a few rental properties, you will have passive income and could potentially be financially independent. Furthermore, you will have a great peace of mind. But this is not a one-day wonder where you buy a few properties and you collect money without any work. Maintaining real estate property is not an easy task, but it could be very profitable.